June housing data shows why we needed higher rates. We need balanced growth, steady as we go, slow and steady. That's the case there. And I think you look at the problem with 2021, we ended with low inventory. We now fast forward to today, right? Mm-hmm. Homes are up. Home sales are up 134%. You got 34% increase in total homes on the market. And this is not a credit bubble that we're looking at. We just needed higher rates. Now, we have them north of 6%, but it's at 6%, we slowed down the economy here.
Did they come down this last week?
They did a little bit.
Okay.
But we've seen it north 6%.
Of course, yeah.
And the national average is very close to being that 6% mark, especially if you look at the discount. You can go to FreddieMac.com and you'll see it costs you a 0.8 in discount, almost a point to buy down the rate, well, listen, right? So it's a big deal.
You want to even the market out more? That's what you do.
100%, right?
It works, and it worked. Like, yeah. You know, I mean, like, let's say, for example, just one builder in specific, not to point out fingers, but let's say a builder like Lennar. where 3 months ago, Lennar wasn't even paying commission to agents, right? Let alone we've got 100 to 150 people on a waiting list. Sorry, agents, we're not paying you commission now. We don't need to, blah, blah, blah. I just got an email yesterday from Lennar offering 5% commission for agents, and they had literally 3 pages of standing inventory that they're all willing to negotiate and and are dropping their price on.
Wow.
And we're talking about 3 months ago, they wouldn't even pay you a commission.
Wow. So in Las Vegas,
it went from one extreme to the other literally in 3 months.
Las Vegas has dropped 24% down year over year in median sales prices, yet we're still holding strong. And you still,
what do you mean? How are we holding strong if we've dropped 24%?
Well, I'm sorry, down sales 24%. Okay. Sorry.
Yeah, I was like,
Las Vegas sales are down 24%.
How the hell is that?
Year over year, median sales prices are up 20%, but they're still double digits.
Yeah.
So the total sales are down 24%, but we're still sustaining the double digit increase or price per home.
Well, that's.
Well, do you think the rates are going to stop that?
Yeah, absolutely. I mean, I don't see home prices going up really with anything anytime soon. Now, I don't think it, are we talking a year and a half, 2 years? Probably not, but I think it's probably going to be about 6 months, maybe 9 months or so before things kind of start evening themselves out, because what we've had in my mind is one extreme to the other. We had such a seller's market, and then the feds came in and basically forced people's hands. Yeah. And when you want a market to do something, and instead of just asking people, you just force them, because if you ask, people aren't going to, right? So forcing it is by doing what they do with the interest rates. Now we've gone from literally all these builders and all these sellers who are in upwards momentum with the market, or at least coasting pretty steadily, that just came to a screaming halt.
Well, I mean,
that's not good either. Mm-hmm. to have a screaming bloody murder mentality right now either.
Well,
it needs
never good to go
more
from
balanced.
one extreme
it just
to
needs
another.
to. I think that the attitude of such an extreme so quickly kind of freaked people out, and people it just needs to be more of a normal balance for things,
I would agree. I want to say this, and I'll ask you, Doug, but I think, when you look at this market, the rates going up, the Fed's policy, right? Fed monetary policy, they raised the Fed's fund rate. They're probably going to do it again. We know that. Yeah. We know that rates have really suppressed the market. If you have a trade-off, I'm probably going to go more inventory than lower rates, because builders overbuilt, because you got to think that's probably going to lead to more of a healthy market. If you have a low rates, and like we did, and then low inventory, you're going to have a problem, right? Builders know that. So you got to kind of, what market would you rather have? Going back to the situation, though, I think if they raise the Fed's fund rate again, and again, that's short-term bonds, not long-term,
right?
And we continue to look at the geopolitical news. We continue to look at the what's going on with the jobs report. We continue to look at the economy as a whole, if it's slowing or not. Yeah. Our investors, our countries, right? Our big corporations going to start taking their money and putting it into the bond market more to store
bond market is never a good idea.
Well, it's just to store the money.
Just store it.
Just store it, just in case something happens. Because now, yes, rates are the cause of this. The last crash we had in 2008 was from the credit boom, right? We had a problem with credit. We don't have that. Now it's just rates.